Good afternoon, good morning, everyone, depending on the side of the globe that you are. Welcome to the CBDC broadcast. We're going to allow a couple of seconds or minutes for the people to join. Thank you for being here today. Okay, I think we can start now. So once again, thank you for joining us. This is the CBDC broadcast. This is our episode number 21. So first, I'm going to give some housekeeping. Then we're going to start our conversation with our guest co-speakers, Catherine Gu and Danny Russell. And afterwards, as most of you already know, we're going to have 10, 15 minutes to have the Q&As from the public. So that's the order of the day. We can go to the next slide. So first, let me introduce FNA. FNA is a leader in advanced network analytics and simulation. FNA stands for Financial Network Analytics, in fact. FNA software is used to uncover hidden connections and anomalies in large, complex datasets to predict the impact of stress events and to optimally configure financial systems and infrastructures. As you can see in the icons that we have on the right of this slide, FNA is trusted by the world's largest central banks, government authorities, commercial banks, and financial infrastructures. Next. So, before starting, I'm going to introduce our speakers today. We have two prime speakers, Catherine Gu, head of CBDC and protocol at Visa. Catherine is Visa's global head of CBDC and protocol, building digital payment and digital currency solutions with central banks, financial partners, and global infrastructure technology companies. Thank you, Catherine, for joining us for the third time, if I'm not wrong. And this is a very nice thing to have you here once again.
Thank you, Carlos, for having me. Really excited to be here, especially with Danny, whom I've got to know through Project Rosalind, to spend a little bit of time talking into it. But thank you for having me again, if you're not bored of me, to share some of the industry overview of what's going on in CBDC. So,
thank you, Catherine. Your view from the industry side is always very relevant, and that's the reason why you're here for the third time. Our co-speaker, Danny Russell, is head of digital currency technology at Bank of England. That's a recent promotion, so congratulations, Danny. If you allow me. Thank you for joining us, Danny.
Yeah, thank you very much, Carlos. I'm great to be here talking with Catherine as well. I'm looking forward to today's conversation.
Thank you. So, and for those who do not know me, my name is Carl Leon. I'm the Director of Financial Market Infrastructures and Digital Currency Solutions at FNA, and I'm the usual host of this series of broadcasts. So, let's start. Next slide. If there's slide, no, there's no more slides. We're going to start now. So, perhaps for those who have joined today, those who have joined in the previous sessions, there has been a very nice change of, let's say, narrative and ideas in these 20-something sessions of the CBDC broadcast. The most recent have touched or have been related a lot to adoption, to the challenges of adoption, to the use cases, to how consumers and merchants will interact with the retail CBDC or other forms of digital currencies, and how to get that adoption going. So that's part of that's the main part of our broadcast today, in which we're going to talk about Project Rosalind, which is a joint experimentation of Bank of England and the BIS Innovation Hub at London, in which the main idea was to develop prototypes for an application programming interface, or API, that could enable a central bank ledger to interact with the private sector. And that's why we have Bank of England and we have Visa, which is like, let's say, the representative of the private sector to understand what has been gained from Rosalind project and other experimentations around retail CBDC design. So that's why we have Danny and Catherine today. So before starting, as usual, I would like to give the floor to Danny and to Catherine to present themselves and to give us any disclaimer that you want to, especially coming from a central bank. I know that disclaimers are important. So Danny, let's go with you first.
Yeah, so thank you very much, Carl. So my role now as head of digital currency technology is within the digital pound unit. I'm leading the technology team, as you'd expect from that. It's our job at the moment. We're developing the blueprint for the design phase as we go through digital pound. But crucially, I'm also leading the experimentation, of which Rosalind was one of the main ones. You've also seen from some of our other public disclosures, we're working on things around point of sale, offline, and sample wallet as well. So that's my primary job throughout this. Disclaimers, obviously, it's myself talking. It doesn't necessarily represent officially the official Bank of England position. But what we can talk about was the goals of what we wanted to achieve at the Bank of England with Project Rosalind. And there was kind of a number of these. And one of them was that we wanted to test the premise that a well-designed API could support two goals of a CBDC, and that is that it could support a platform for everyday payments, and that could also be a platform for innovation. So by presenting the API and focusing on the outwards and kind of abstracting away the ledger, we found that was quite distinctive. A lot of CBDC projects around the world were also focusing a lot on token versus UTXO versus account. It was really coming to ledger back, which makes sense because that is what central banks are kind of, that's where their expertise is, that the ledgers. But we were like, actually, let's look forward. Let's look at the use cases. Let's see what we can achieve by having a well-designed API. We wanted to harness the creativity of innovators and entrepreneurs by using public infrastructure to see what we can do. And we're going to talk about some of the use cases that they came up later on. And we also want to create a reusable asset. So now that we've got this API, and it wasn't about making it the most performant. It wasn't about making it the most necessarily the most secure. We want to talk about that as well. But can we drive the use case? Can we create that platform for innovation of day payments? And now that we've got that API, that's now a bit of a cornerstone for the rest of our experiments going forward. So we've created something we can reuse. So that's what we wanted to get out of Rosalind.
Thank you, Danny. Catherine.
Yeah, thanks. Well, firstly, also similar to Danny, this is my view, not necessarily representing the view of Visa. And I can just share a little bit of background in terms of how we've been sort of participating in this space in general. It matters a lot as we are in the mix of all of this new wave of future movement of money, trying to really understand what kind of architecture design makes the most sense for the private sector to partner with the public. And I think for so long, everyone understands that it's so important to have this public-private partnership, but exactly what it means and how do you really put it concretely into the things. And this is where I find, for example, Project Rosalind being a really practical one, because, as we'll spend time to talk about all these APIs and stuff, it demonstrates exactly that, which is what is the role that as a central bank you can play versus how the private sectors can then innovate on top of that, which is very important for us because our premise is, we want to support the money movement of all kinds. The whole point is to make it seamless that from a user experience perspective, you don't need to worry about what's the backend infrastructure. You just want to understand how easily I can send money over to you no matter where you are. And that's always been the goal of Visa. And clearly, as money evolves with all these blockchain technology or not, it's really important for us to figure out the right infrastructure. And hence, our contribution to any of these projects in general is just to add the voice from the private sector perspective, bring in our expertise in understanding what do our clients want. And these are the banks, the FIs, who are then directly facing the consumers and the businesses and bring that set of insights into these sort of collaboration experiments.
Thank you, Catherine. And I think it's very interesting because at the end, I think that this is like acknowledging that the central banks, what they do best is to issue money. I mean, they're the safest. I mean, the central banks issue the safest form of money available, and the private sector is the ones who know really how to interact with the client. I mean, with the users, with the customers, and with the merchants. And the private sector perhaps knows from their existing experience. Visa is obviously a good case of what people, I mean, the public wants from money in a day-to-day basis. So I think that this is a very interesting example of what this two-tier model of the CBDC, retail CBDC, could look like. So that's really interesting. So after your introductions, let's start with the first question. So design options right now are the mainstay of adoption. And that sounds like very obvious, but at the beginning of the retail CBDC journey, that was not very clear. So Danny, could you explain the retail CBDC technical designs that were tested and were evaluated within Project Rosalind? And afterwards, Catherine, outside the Project Rosalind, what is Visa testing and evaluating about retail CBDCs, tokenized deposits, and stablecoins? Because I think that having the conversation about all the different forms of digital currencies makes sense, because as I'm going to, or perhaps as we're going to conclude, adoption is painful, it's difficult, and needs a lot of work. Danny, thank you.
Yeah, so, obviously, the design that was implemented in Project Rosalind was specific for Project Rosalind. It shouldn't be considered as that being the design of the digital pound going forward. But what it did is really helped to make a lot of concrete learnings about what we could take away and learn into our design, and I'll go into that a bit more spec. But I said before that one of the goals of Project Rosalind from a technology point of view was, can you abstract away the ledger, right? So in order to do that, within the project, we actually built two ledgers, right? One which was account-based on Hyperledger Fabric, and one which was a UTXO, Hyperledger Besu, and then a UTXO simulation on Hyperledger Fabric. And one of the things that we did, one of the conclusions we got from this is that actually, with the exception of offline, because everything I say is going to have an asterisk of everything is more difficult with offline, it didn't make a difference. The the APIs worked exactly the same with the same data model across the UTXO account base. That was quite an important learning for us, because it means actually we can spend more time focusing on this forward-facing functionality we need. We don't have to be driven so much by the ledger, which is, like I said before, how much one of the things actually also did is we learned from this was that there was actually a lot of different interpretations about the roles of PIPs, which are what we call wallet providers, and the role of ESIPs, which were other providers in the ecosystem that could have been anything that wasn't a wallet, basically. It could have been a merchant, could have been another app, could have been whatever. It was interesting seeing all different tech participants' interpretation of what their roles and responsibilities were. And generally, we were willing to kind of let that all fly, because obviously one of the things we'll probably touch on this later on is that being a biz project, it has to work for all of the biz's, 150, I'm going to get this wrong, but very lots of central banks around the world, all the constituents. So we didn't want to bind it too much to the UK specific context. So there are a few things which we didn't compromise on, which we'll come towards later on. We were very interested to see different interpretations. We went out there with so we had an initial version of a we thought offline would work in phase one. That ended up being very tightly bound to a particular implementation. When we got to the phase two tech sprint, we found there was actually lots of different other offline interpretations. So that was also one thing to working at how we can get a lot of flexibility there. One of the big things we found from Rosalind, though, is having all this variety and breadth of use cases, and actually being able to have people see them and hold them. It really made it a lot tangible for a lot of the stakeholders, both within our Rosalind participants and within the bank, of being able to say, okay, that's what this could actually be. It made it real. Like I said, the breadth wasn't restricted to UK context. We'll talk about some of the use cases later on that maybe not applicable to UK context. But even that it helped really broaden the horizon. That's one of the things we were really excited about, was making sure that the API we developed was not use case specific. Again, here's another asterisk offline, because everything is offline. But it was, by not making it use case specific, we actually enabled a lot more of innovation. That was also quite interesting, proving that hypothesis we had at the start, which we wanted to be a platform formation. So yeah, we've done the UTXOs, we've done the account-based model, we tested various different offlines. Some of the participants did slightly different privacy models. Some of them did slightly different, ID models, and even that was all really valid learnings that we've actually kicked off some future experiments of some of those as well. So yeah, we took a lot from that.
Thank you, Danny. Catherine.
So the question, I guess, is you're asking outside of Project Rosalind what we're testing and focused on, but sort of like, I'm sure we'll come back to the Project Rosalind itself, because I think there's so many good points that he just made that I want to just quickly just sort of double down on. The fact that the focus of this project, again, I emphasize on the practicality, right? Because I think for so long, many people sort of get bogged down to the technology choice itself, or should we be using a specific type of blockchain or non-blockchain, and that can consume all your energy just purely based on that. But we're not really trying to aim for what's the end goal, what's the use cases that we're aiming here. So I think that's really important. So let me just sort of give some overall, like, in terms of how Visa has been sort of involved. We've been active, I guess, in terms of at least learning and contributing towards CBDC since since when CBDC was becoming a terminology and start to get a mainstream sort of discussions. I think the importance of that, Carlos, you mentioned before, is the fact that we're looking at this space, not just CBDC in a silo, but really looking at the type of money, the evolution, like we like to call it the evolution of fiat money as it gets tokenized on the blockchain, right? On blockchain or not blockchain. So essentially, we're still looking at money itself, but it can take many functional forms, whether it's CBDCs, tokenized deposits, and stablecoins. And I think, especially as we're talking about it today, it makes even more sense to look through the spectrum of these available choices that would be suitable, depends on what country you're looking at and what kind of personas you'll be targeting. And hence, that's the role of Visa, because again, we're a network of many different networks. We're trying to serve as general as possible the different type of solutions. And hence, as we're looking at a B2B flow, inevitably that's going to be different from the C2B flow. But as you're thinking about it, the money might originate in some point, say, from a tokenized deposit form that could be in a B2B flow, but in the end, it could land in a personal wallet that could be in the form of our CBDC. Now, the question is, how do you ensure that these things can get converted, fungible, as well as interoperable, cross-border, and such? All these things are sort of the stuff that we want to look at. And I think the role that Visa can particularly add to it is starting by thinking about what's the right standards and the best practices we can bring to the industry, because that's really, I think, is always been the value proposition coming from Visa and the likes, which is we help to work with all our partners and the banks on our network to coordinate a best industry approach, so then we can then work with the central banks and the regulators to really establish the sort of policy agendas that they have in mind. And I think it's really topical, really, as CBDCs evolve, whether it's in the form of retail as well as in the form of wholesale, and be coupled with tokenized deposits and the likes, it gets really interesting. And I do think that the future, again, like this notion of no one size fits all solution is right, because depends on really your personal preferences and who you are. That might just mean you have many different options. But from our perspective, we just want to make sure that whatever you choose should be able to support you to do that.
And I think that both answers are really interesting in something that we have been discussing in the latest versions of this broadcast, in the sense that the use case normally is technology agnostic. I mean, the consumer and the merchant, they don't care if it's DLT, token based, account based, they don't care that much about it. So I think it's a very interesting approach to start, as I have read in a book read recently, that the design of many big projects should start from the right. I mean, from the consumer, from the user, from the merchant, and let's go to the left. And in the far left, it's the technology that is going to be withstanding everything. So that's a really interesting approach. So for the next question, Catherine and Danny, could you share some of the key learnings and insights that you have gained from the experiments thus far? Have there been any unexpected or surprises or revelations during this process that we should be aware of? Let's go with Catherine first then.
So firstly, I think what's really interesting. So I participated as an advisor to Project Rosalind, and hence involved, at least especially in the phase 1 of that design. I think what's really valuable coming out of that is the discussion around this layer, which I think is called the Ledger API layers, and the right standards and stuff to be used. Because I think, to Danny's point, that it's hard to really specify exactly who is doing what when this thing becomes real, and hence it's really important to build this sort of general API layer that it should be able to anticipate future use cases as they emerge, and creating this platform open enough that people can then leverage these things. And of course, that's kind of borrowing all the best sort of ISO 20022 format and all the the technical details embedded into it. I think that's really important because with this as the foundation, you can then start, hopefully, if this platform will continue to be used in future phases inside the digital pound or not. I mean, that's going to be really valuable to really encourage the private sectors to take on their own projects and then be able to build on top of that. That's one thing I think is really useful for me to see the inside the decision making put behind it. I would say the other thing that I find it interesting personally is around the issue of privacy, because I think for sure that's going to be a really important aspect as we're thinking about the design features for retail CBDCs. And I think, through the Project Rosalind, it made a lot of emphasis around, how you can protect and encrypt these sort of personal sensitive informations. And I think that is a really good foundation to establish because, as we're looking at privacy preserving technologies, there's so many different spectrum of things, whether you're looking for anonymous transactions or confidential transactions or all the things in between. It would be helpful to continue this, both the technical development, but also the policy definition of the privacy, because I think as we're involved in, we participate in Project Rosalind, but right now we're also participating in another central bank pilot by the Central Bank of Brazil. There's all these sort of policy considerations that need to happen first to really then help to guide the private sector in providing the right solution to ensure that that level of privacy is being guaranteed. So that's the two things for me.
Thank you, Catherine. Very nice. Danny.
Yeah, I think that was right. It was really that we had to bring privacy right up front. It's something we're going to talk about later on as being one of our not negotiables. And the general model, for those who weren't familiar, was that the central bank didn't see any PII. The information was, there's a shared symmetric key was created between the two wallet providers, and it encrypted something that was affectionately known as the blob that went through the central bank so that we couldn't see it. It was one of the things we went with our tech advisors to say, actually, should everything go through the central bank, or should it actually go kind of peer-to-peer first? And let's say, look, we chose to go through the central bank. It's still a design we are actively kind of testing out during the digital pound design phases, whether or not we still go peer-to-peer or through that from a performance point of view. But for Rosalind, we did that. And it was something that was really important. So the encryption is very much V1, right? So I know everyone calls me going, I could do a much better version of that. And I'm absolutely sure you could. It was just to prove the point that we didn't want to see any information. It was right then to get go. And we also were very strict with our participants that we gave everybody who was a participant in Rosalind essentially 3 wallets. So it's like one as a payer, one as a payee, and then they could have a third one that would act as a merchant or some kind of eSIM. And we're like, no, you can't just pay yourself. You have to mimic that flow, right? You have to really test this out, understand how this works. And that actually, we got a lot more insights on that just by that, because everyone's initial reaction being a short tech sprint was like, I'll just pay myself and everything will be on us and I won't send any kind of PII. And I was like, no, that's not, we're not learning anything here if you do that, right? We're not testing the API, which is the goals. So I've already spoken about kind of the rewards that, the learnings we've got here, the use, being a use case agnostic API, except offline, was incredibly important. But even when we talk about offline, seeing how different tech sprint participants interpreted how they would set up offline, what they would do with the CBDC. Was it moved to a central escrow pot? Was it moved to a PIP specific escrow pot? And how they saw that settlement. That was really fascinating from watching them learn out from that. So we're experimenting more with that. We had the being ledger agnostic, major learning from that, right? It was so important we didn't have to do that. And also just the privacy was obviously we had really baked that in from the start. One of the things I think we did do, like I said before, we were very flexible in terms of, the participants' interpretations of the rules, and because we want to see the full gamut and range of CBDC, so we can actually go for, it might not be the UK's liking, but it might work for another jurisdiction. I might go, actually, that's the kind of CBDC that works for me, and I like that use case, right? So we were very open to interpretation, but what came very clear was, and I mean, it's kind of obvious when you speak to Visa about this, right? Obviously, because we said in our technology working paper that we were going to have to probably set standards for interoperability beyond our APIs, right? It will not be acceptable for a digital pound for, if a merchant says they accept the digital pound, it only works for wallet A but doesn't work for wallet B, or if Catherine and I are on different wallets, we can't pay peer-to-peer. I mean, one of the justifications for, CBDCs was to prevent walled gardens and private money. We can't create walled gardens in CBDC. So I think that just really drove that point home, even in such little things like the alias definition, right? Some people use names, some people use GUID, some people use phone number, and we intentionally wanted it to be flexible, but that won't work in production, right? Even the idea of having, multiple offline payment solutions that don't work on the same standard is it's definitely, my opinion, is maybe not something we'd do in production, because again, you don't want to, Carl, so if you've got one offline CBDC payment method and I've got the other, that doesn't work, right? So it's meant to be that kind of universal payment platform, so it has to work and be interoperable. So I think that really drove home that point from Rosalind. Seeing everyone's interpretations was like, actually, this is a really important thing, is setting these standards for how things work, to make sure that all the wallets talk to each other. Doing that while still creating enough space for PIPs and ESIPs to innovate, I think that's going to be a real one of the real kind of important questions as we go through in the digital pound design phase.
Thank you. That's really interesting.
Yeah, and maybe just to double down on Jenny's point, because I do hope that this will help other central banks to set that sort of the right approach and the principle design, because before Project Rosalind, there has been retail CBDC being experimented. And I do think that is one area, a key element, in fact, to consider, like, to what extent is your CBDC platform open enough that you're truly allowing the private sectors to then bring their solutions on top of, because it's impossible, as you're thinking about payments use cases, to control for every single potential eventualities. And therefore, you have to provide that universality in some way. It's hard to achieve, but this is the sort of the rule that you should apply, because it's impossible to just say, this is the only type of wallet, let's use it as an example, that anyone or everyone will have to use, because that really just kills off competition. But instead, therefore, that's why in Project Rosalind, defining the roles and responsibilities, what's that thing that's really important to define versus what's you should let the private sector to really then just bring their own and innovate and stuff like that. I think that's exactly the value from the project.
That's great. I have one question. Now that Danny mentioned that perhaps one of the things that is common to all the approaches, solutions, and different views of this is the offline payments. I know it's a very, let's say, silly question, but what is the concept behind offline payment? And I know that some people say, well, that's very obvious, but I have seen experts debating what offline is. Is it that you don't need internet or some kind of connection in the POS device, or is it that it's not registered in a central base somewhere afterwards, and it's like there's a clearing afterwards? What is the concept of offline in this project?
So for us, offline for the sake of Rosalind was specifically both the payee and payer were offline, right? If either one were online, so if you're, I'm just imagine I'm in a really trendy basement bar, which even I can't imagine happening, but let's just pretend, right? I might not have phone signal, but their POS their POS device would be, connected into, broadband into the wall, whatever, right? That's not offline, right? Because one side of the payer is online, right? If we're both at 30,000 feet and there's no Wi-Fi in a plane, and we're both there, or we're both in the tube in London, that's offline. It was both being offline. There are a lot of different, I think offline again, offline is a very policy specific decision, and you'll see that the countries have gone there, what they've done for offline. If it's, some people go for inclusion, some people go for, the accent might give it away. I'm originally from Australia. If I'm in Australia and, you've got the outback with not a lot of phone signal, that's a very different proposition to the UK, which is fairly well served from a network connectivity point of view. There's different rationales for offline. So we were just actually, that was definitely in touch in Rosalind, which just looked at the different technical options for how it was done. QR, NFC, again, UTXO versus account balance-based models. There was lots of different versions for that as well.
Thank you, Danny. So let's go to the next one. In terms of policy and design choices for a retail CBDC, how is Project Rosalind being leveraged to explore different options and models and assess their viability? Who wants to go first?
Catherine, or would you like me to up to you?
Please, yeah.
It's policy, it probably hits towards me, doesn't it? So as we were alluding to before, we were very specific being a BIS project, and the BIS has, like I said, 100, 150 odd central bank members, and this has to be applicable to all. So we tried really hard to be as policy agnostic around some decisions. So for example, limits, right? Holding limits. We did not, for the sake of Rosalind, enforce holding limits, right? The UK limit is different to the proposed one for the digital euro, and there are other ones who might have no holding limits, right? So we're like, actually, let's not enforce any holding limits within here, and let's just see the full range of use cases, right? And there were some really interesting ones. One of the most interesting ones was a trade finance use case, I think buying 12 Jaguar Land Rovers. That's a little bit out of my own kind of personal holding limit, but it's a really interesting use case. Now that might not be, we haven't decided anything on corporate limits yet in the UK. That might not be within the UK context, but that could work very well for other parts of the world, right? Where that's a big problem for importing and exporting finance. So we saw a lot of really, by not enforcing that particular policies, we saw lots of really interesting use cases. There were a couple of things we didn't compromise on, no matter what the kind of suggested use case was. Privacy, as we've mentioned before, right? That it had to be private from the central bank. We didn't want to see any of that. We didn't want to do anything that was restrictions based. We didn't want anything about seeing what people saw, or even if it was with the most noble of intentions, we didn't want to do anything around that, because that can always be kind of misconstrued or misused. So we didn't want to prevent. So by not being able to, by ensuring we didn't see the PII, by ensuring we didn't see what anybody was buying, we prevented any of those use cases happening, and that is actually something we're looking to do in the digital pound as well. Probably the most controversial item we had about in the design was where to place some of the conditional logic for the payments, right? So there was lots of debate between us and the participants as to whether or not the lock, the the actual, like, if I'm paying Catherine the fact that, let's just assume it's the account-based one. Account 123 is paying 5, 6, 7, 8 up to 50 quid. And this is, how the money can be unlocked. We had a couple of different models. It was, either Catherine as the payer could just draw it down, drip feed over time up to every lock had an expiry limit because to make sure it was all flushed out and everyone got their funds back. Or there would be a third-party lock where Carlos would be the decider because it was, all different functionality. We had lots of debates as to whether that lock should be stored on the central ledger or whether it should be stored on the PIP. And we decided having the lock on the central ledger because of what I was saying before about preventing walled gardens. It had to be visible so that if Catherine and I are on separate wallets, we can both use that function. We both have visibility of that lock. That's not to say that how we kind of balanced that with the innovation was, Carlos, you could have as the kind of decisioning PIP we use in a third-party lock. You can have the most proprietary algorithm you want, and that can be your innovation. But as far as the ledger knows, everyone's PIP can see, account 1's are paying account 2 and account 3. Actually, we just said the PIP. We didn't even say who the account was. And Carlos's PIP is the one that gets to say when and how much. So you could have that made very, very flexible, very, very innovative, but you still had that visibility across. If we were on different wallets, it worked. Whereas some of the participants were like, actually, it's only going to work if everyone's on our wallet. And that was like, actually, no, that's creating the walled gardens. That's what we're not allowing to do. Now, one of the things before we were saying earlier about that is by having that kind of logic housed within Carlos's PIP, that again is a lot of, that's a lot of trust, right? So what is it going to ask for regulatory kind of user standards, regulatory things? There's no public smart contract for us to go even down a code of law route. So that, again, open that bring of what's the standards going to be. We see a lot in open bank in the UK about there's a very set form of you have to show what people can and can't do when you're giving granting people permission. It became obvious that if you're going to go down that kind of conditional payments, look, we probably need standards for that. So people who are not technically literate, they could have very clear rules. So that, again, was something really interesting that we said, look, for visibility, the premise we wanted to test for Rosalind, again, this is Rosalind, not the digital pound. We wanted to test having that lock centrally visible. The logic could be stored and built by the private. Well, the logic was stored and built by the private sector, not by us, and will never be by us. But then it opened up the eyes of what's that standard going to be for usability. So that was one of the things that was really important. Was privacy was not negotiable. Having visible locks of the things were interoperable between PIPs was mandatory as well. Everything else was kind of open to interpretations to see what people could do to kind of broaden our horizons.
Good, thank you, Danny. Catherine.
Danny clearly is the expert on the project details, so I don't want to build more on that. But I do think, you touch on a really interesting one, which is on this programmability, and that's going to be this huge open area, I think, for the next few years to really figure out, because I think in the industry right now, there's a lot of sort of debates between, should we aim for programmable money? Should we aim for programmable payments? There's also the in-between, whether you call it a wrap token, purpose-bound token, many different ways to describe the same idea. So I think that's really going to be very interesting because, as we're looking at blockchain fundamentally and trying to make a case why we would even bother to think about DLT, it does come to this kind of potentially really powerful programmable features that it could enable, that you can build a whole decentralized finance on existing, smart contract. Why not think about the same thing in the future for a retail CBDC? Because to me, that's perfectly doable. If you have the smart contract, Turing complete, all of that, there's nothing to stop you from doing that. But now it comes back to where is that programmability going to sit, and that will then imply who is liable if something goes wrong. And I think that's going to be, one thing is the liability side, but the other is also who has the sovereignty and the control over it. And hence, I think from the Visa perspective, whether for the future phases of, say, Project Rosalind or with other CBDC pilots, we're actively looking at these sort of like design choices, and to see, both from a technology endpoint, if there's any sort of clear pros and cons between where you enter that level of programmability versus also that user experience of, if a user comes to use a retail CBDC and that programmability is embedded right from the beginning by the central bank, would that be a good thing? Would that be driving adoption? Would someone rather prefer to program themselves? Say, I want to set up a standing order or direct debit. I want to program that and dictate how much it is rather than letting someone else to do that for me. So things like that is going to be really interesting as I think the space gets more mature in testing for things beyond just, the basic, the non-negotiable ones, but moving on to the more sort of flexible designs.
It'd be remiss of me to say, though, I agree with everything what Catherine said there from a technology point of view, but from a policy point of view in the UK, we definitely will not be doing any sort of programmable money or purpose-bound tokens, because that goes against our policy principles we've outlined in our consultation paper of not seeing who you are or what you're spending on, right? So this is why all the stuff in Rosalind was done at the PIP level, where users, like I said, they're programmable payments, so conditional payments. They weren't linked to the actual money. So yeah, definitely UK perspective, no purpose-bound tokens or programmable money.
That's a great. That's a very interesting thing to clarify. I agree with Daniel. And the next question: take into account the use cases and the scenarios that have been tested with Project Rosalind or outside Project Rosalind. What does this say about the capabilities of retail CBDCs in the case of, for instance, in the Rosalind project? And what does it say about the capabilities of other forms of potential forms of money, like tokenized deposits or stablecoins, for some experiments outside Project Rosalind? Danny.
I mean, I think the Project Rosalind proved that. Project Rosalind proved, like I said before, one of the goals, the two kind of goals of a CBDC was to be able to support everyday payments and also be a platform for innovation. I think if you look at the use cases in the annex of the report, we proved that everyday payments, there was multiple forms of POS, e-commerce, peer-to-peer, offline, that kind of fits your everyday payments. But on innovation, we saw lots of things around DVP and PVP. We saw, like I said, trade finance, gig economy workers, micropayments, split payments. We saw things integrated with smart assistants. We saw NFTs being minted. We saw different decentralized. We saw integrations with card schemes, and we saw a lot of things that really were very user focused as well. We saw things where we created merchant specific aliases, very similar to like kind of tokenized pans and device pans and all that kind of stuff from the card world, having that applied to users. So really putting that, when you have that kind of view of user privacy and user kind of choice, and that it made there's lots of really interesting user-centric devices. Like, one of the things we saw was there was a wallet where, by having all these merchant and daily system where people had saved their wallets, you could log into your banking app, the banking app, so the wallet app, and basically see where your wallet being saved everywhere, kind of Apple, and just turn them off, right? And that's functionality I'd love to be able to go into my bank right now and see everywhere it's got my Visa or MasterCard, and gone, no. So, like, that's really interesting stuff that we could put that through. And of course, the use cases we saw here, what I think was really interesting about it was, was every single use case that we saw during Rosalind, you could probably do it with another payment method already today. What you couldn't do is all the use cases with a single payment method. And that's the thing that really kind of struck us, was that actually, by starting, this is also why we wanted to have that more open phase for phase 2, was to kind of really get a breadth of use cases. But it was really striking that you could have that breadth of use cases all supported by a single payment method. And that was really interesting from creating that kind of platform for innovation. So, I appreciate it's one of those things that we have to get everything right in order to create the environment for some of that utility. And that means like being able to use it for everyday payments and all that kind of stuff. And we don't want to, the bank has been very clear about not wanting to, we don't want to dominate the world in payments. We want to do a little bit, but just that breadth and being able to support that breadth in a single payment method was what we really took away from this.
Thank you, Dan. Catherine.
Yeah, I mean, I think a lot of the stuff that we would ideally like to explore further is to say, looking at from between the merchant perspective, what could they benefit from accepting these kind of new forms of payments, and just in terms of listing some of the current pain points. Like, one thing is clear in terms of the settlement of funds, it still takes several days, for the funds to eventually arrive in the merchant's account. Now, of course, that's not just a technology issue. There's also other things that's embedded with that. But I think if we can have more of a real-time settlement flow that could be enabled by the underlying rail, that would help to improve things. And we have already publicly announced these sort of testings by leveraging the existing stablecoin USDC that's already in the market. But that's really just trying to prove the point, to what extent can a merchant settlement be faster and cheaper if we're leveraging something that's built on the blockchain infrastructure. And if that really becomes sort of a valid proposition, then I think it makes sense as banks and central banks are thinking about tokenizing these existing fiat monies and putting onto a new rail that could make things a lot more efficient. I would say then, can be applicable for both domestic and cross-border use cases. But again, beyond that, we talked a lot around cost-saving sort of use cases. That's going to be really interesting. But I also think, future use cases pertaining to whether it's offline payments or programmable payments or sorry, conditional payments, whatever people like to call it these days, that's going to be fascinating. It's just like, that could potentially bring in net new use cases that today we might not even be thinking about, or things very hard to achieve, certainly hard to achieve from a retail level. Say, how can you fractionalize your assets and purchase that through some sort of like tokenized deposits or CBDC? We can't do it today. And I think in the future, it could have a lot of interesting potentials that I would be very excited to sort of look for how we can contribute in that space.
Thank you, Katerina and Danny. We're running out of time, so I'm going to try to compress a couple of questions I still have left. Can you provide some insights about how central banks and the private sector should communicate the benefits of retail CBDCs and other potential forms of money or payment instruments to end user and communities? Is there something that we have learned from these type of experiments about this?
I'm going to let Catherine go forward on that one first.
But it's a policy question. You're saying your question is, how should a central bank be communicating about these?
No, central banks and the private sector. I think that's like a joint task for central banks and the private sector to communicate the users, potential users, consumers, and merchants about the benefits and perhaps to demystify some of the things that are being thought about what these new forms of money could bring in terms of privacy and some other things. What have we learned so far about how to make those communications effective so that these new forms of money are adopted?
Yeah, I think, okay, there's this great question, but there's many different layers to that. I think without anything else, firstly, I think the trust is going to be super important, right? In the sense, like, how much do they trust that the government can protect and really ensure your personal privacy? And I think that's a great point Danny brought up through this conversation from Project Rosalind. And it could become like a real differentiating factor as you're looking at different CBDCs being issued by countries, because clearly there is some differentiation in terms of where privacy is sitting around all the set of sort of requirements, the must-haves for that. So I think things like that bring the trust. How can you get the public to trust you is thing number one. Then the number two, to me at least, I think, is relating to interoperability, because, if anything, what we've seen from the private and also from the Visa perspective is that there's certainly going to be stickiness in the way that payments have been. And as you're trying to make these changes, we need to think about it from an incremental level and really trying to, again, go back to the bottom line of, why would it make sense? Am I saving cost? Am I bringing new revenues and hence persuading whether it's a business or individual to use that? And I think to that extent, given that, we are already using whatever existing payment infrastructure we're relying on today, And again, bear in mind, today's infrastructure is good. We're just simply trying to improve and make something better for the future. And hence, trying to have that interoperability, you must ensure that it is interoperable with existing payments. I think it's going to be a core sort of requirement, because in order to push for that mass adoption in the future of saying using retail CBDC or something similar, you got to ensure that, say, today's card payments and other type of payments can still support these new forms of money. And I think after all of that, then of course we have all the other stuff that we've been discussing, like programmability and stuff that would be quite interesting for the future.
Danny.
Cool. I'm sure, Carson, I'm allowed one central bank dodge in this, aren't I? So I might play it on this on the last question. But I think, I can't go too much into it. Obviously, we've got our consultation paper response coming out in the next couple of months, which will obviously have a comms plan going along with it. But I think what I can say about it is that, it's incredibly important that we are a bit more kind of open with our communication, our thinking, explaining the use cases and rationales and all that kind of stuff for it. There are a lot of myths around CBDC going out there that we need to kind of counteract. I just think it's important we do communicate more than we are, and I think that's what we're intending to do, because for those at least familiar with the UK context, we're currently losing the debate to some graffiti on a highway overpass halfway up the country. And that only happens because there's kind of a little bit more of a vacuum. So we need to be a bit more forward on our communication. I think we intend to do that, but I can't really say much more because we've got our CP response coming out shortly.
That's great. Thank you, Danny. Thank you, Catherine. We only have 8 minutes for Q&As. It has been a very nice discussion about Project Rosalind and other experiments about what the other forms of digital money could be adopted. The first question is mine, in fact. Have you heard about the reverse waterfall feature that the digital euro has been thinking of? Is that something that you consider in the Rosalind project?
We wanted to focus specifically on CBDC. We didn't focus on those CBDC use cases without necessarily trying to integrate in with the existing kind of account-to-account payment systems that are out there. So we kind of drew our boundary very specifically around CBDC. It's something obviously we're aware of. We speak to the ECB quite regularly. We're aware of that. I think there's a few kind of policy decisions that are interesting about that, but obviously it's very, very interesting functionality. But no, we didn't consider it for Rosalind because we want to kind of tightly bound our boundary and not require everybody to have access to, say, FPS, faster payments in the UK or something like that. So we drew our boundary around CBDC.
Thank you. That was mine. So I'm going to start with the questions from the public. The first one is one that I find particularly interesting. Which top 3 blockchains are central banks considering to manage and move digital currencies, and why? I would say first, are central banks considering blockchains to do this, at least in the first ledger, or?
I think interestingly that most of my answers today have been saying this project has proven that we don't have to consider that right now, and we can focus on the use cases. So we are focusing on, like I said, we're focusing on the use cases. We're going to address ledger in a future experiment. So no, we're not looking. Like I said, we used Ethereum and Fabric for this one. Both had their limitations around performance, which I saw questions as well coming up around that. So no, it's not something we're particularly looking at the moment. We will consider it in the future, but we're not. It's not something we're looking at right now. Not certainly for the scope of this project.
Good. Another one. How likely is that retail CBDCs and stablecoins will feature offline payments? We already talked about the retail CBDCs, but what about stablecoins, Catherine?
So from a technology angle, it is viable, right? I mean, from a pure technology angle, because as long as you have the right hardware compatibility and stuff, I'm like at Visa, we've also developed this offline payment system a few years back, looking exactly that. And when we tested that in-house, we're actually just using an ERC20 to test. But the question is more about the why and where would it be applicable? Because I think, take existing stable coins like USDC. I think a lot of that is, say, trying to support on the trading side for crypto trading or for, say, cross-border remittances. Now, if that's going to continue to be the major dominant use cases of, say, a stable coin, then it makes less sense to have offline, just because, cross-border sort of remittance flow, there's no point of you getting it offline. So I can only say that from a technology angle, it is viable, but whether it will become a reality, it really depends on who is going to use that.
That's great. There's a very nice question, very general one. Is the two-tier CBDC model already a standard for all central banks? What do you think?
I think it certainly is for Rosalind. This is our consultation. So for digital pound, it was something that we've obviously put out. This is our two-tier model. We're looking into. We think it's obviously from a privacy point of view. The alternative to that is, I guess, potentially doing AML and KYC to the central bank, which kind of violates our privacy constraints. So I think at least for the UK, it is.
Okay, next one, and this is for Catherine. Has Visa started to envisage any solutions to near instant exchange of independently created CBDCs? Well, I don't know how you can talk about independently created CBDCs, but perhaps stablecoins or something like that. What do you think, Catherine?
If I understand the question, it's about the interoperability, say, between different CBDCs or CBDCs and stablecoins and the likes, right? Have we considered that? Answer is yes. And in fact, in the previous pilot that we've participated in, Brazil's Live Challenge last year, we did demonstrate the interoperability between a simulated real digital CBDC with respect to a stablecoin like USDC. So in that specific project, we leverage the payment channels and then to achieve atomic settlement between the two, kind of the swaps between the two currencies, and to do it in a real-time plus atomic fashion. So it's very interesting. And I do think, from our perspective, we're agnostic in many ways in terms of like the currency or the forms that anyone would want to use, but we want to ensure things like atomicities could be achieved to do all these DVP and PVP payment flows.
Thank you, Catherine and Danny. And now the last one, and this is a word that you, Catherine, mentioned a couple of minutes ago, which is trust. Trust regarding the money that is being created. I mean, the issuer of the money, which is the central bank in this case. So one of the questions is, how do we convince the non-technical general public that CBDCs are an improvement on our current payment system and won't be maliciously used by central governments to freeze assets and so on and so forth? Is this something that I guess in G7 countries is rather well taken care of because central banks are trusted? But I think it's more a question for central banks outside the G7. Is that something that central banks should be worried about, I guess?
Sorry, Carlos, what's the question specifically about outside the G7, sorry?
That how to convince central banks, how to convince people from non-G7 countries, I would say, that the government is not going to use the retail CBDCs and the information in a malicious form.
I mean, obviously, I can only comment on the UK context, and that's by making it as technologically impossible from a central bank or a government to do that. Obviously, existing law enforcement, they would, as they would be able to now, they can go to your bank and do it that way. So it'd be equivalent to that, but it wouldn't be from the central bank, or so it's the same protections people have against their commercial bank money now. But it wouldn't be from the central bank or the government.
Thank you, Danny. Catherine, anything else?
Not for that, but I think in general, I would say that, the space is very exciting, and I definitely think the time is right because we're seeing not like for sure, the CBDC movement has been a while, but increasingly what I see is this institutional interest in adoptions and experimentation of things. And I truly do think that this is a really interesting time for all of us to think about, trying to tackle many of the pain points that we know of today, and trying to really think through that blockchain as a piece of technology, if there's something specific we can really bring of value for both existing business logic as well as all the ambitious new projects we're trying to create. So I think this type of public-private partnership is going to be crucial if we really want to get something to work in the future.
And I think that's a good conclusion, that the joint efforts of the public sector, the central banks and the private sector, is what it's going to take the retail CBDCs and many other projects forward. Otherwise, the adoption will be very low and slow, as I like to say. Thank you, Catherine. Thank you, Danny, for joining us today. We're already 1 minute past the hour. Thank you, everyone, for joining the CBDC broadcast number 21. Coming in November, we have 2 events: the CBDC broadcast number 22 with CrunchTwist and IDFC First Bank from India. And in November 22nd, we're going to have the FMI broadcast number 14 featuring CLS and FNA about atomic settlement and molecular settlements. So, Danny, Catherine, once again, thank you very much. Thank you, everyone, for attending today. Have a very nice day.